and welcome to today's video, which is called Squeeze. After yesterday's CPI, we are getting PPI today, and we got quite a few developments in between already yesterday, and they are responsible for what we had seen in equities. So let's dive into the details. You know pretty well what I do on my side. Thank you very much for the great reception of these videos. Thanks for liking them and subscribing to the channel, because they go up at unpredictable times during the day. So, starting with gold, silver and miners, my call had been that these gold would be among the first to catch a bit, no matter what the CPI would arrive in, how high a number that would be. It was hotter than I expected, and I was expecting it to err on the side of hotness already. And yet, you see how fast gold recovered. And trading signals clients had been ready for that before the figure arriving, and around that and following the price recovery too, and the same goes for what I expect for today. The same goes for oil, where the 73 to 74.50 area, my target on the upside, had been reached, and I called for sellers to start appearing there. And you see that they did not have to struggle very hard to overpower the buyers there. And you see for yourself where crude oil is trading and what I had been calling regarding the upcoming move in black gold. Trading signals clients know. Yields, pretty essential chart. 10-year is way above 450. I called for yields to start rising again, and yesterday's hot figure was merely a confirmation of that move getting underway and gaining traction, because this is what influences Fed monetary policy, and it's still a little appreciated shift that bond markets and other such as equities are starting to deal with already only now rather than already, because it's a process. And yesterday's session was disrupted by the so-called peace dividend, by Trump having a talk with Putin and the prospect of peace in Ukraine, which is a very important development. So that's why you see DAX rallying, and that was, in my view, the key reason responsible for equities not tanking on the prospects of much tighter than appreciated Fed policy yesterday. Notice that no one had talked about prospect of 1 or maybe even 2 rate hikes, 25. So far the focus is only on removing the prospects of how near rate cuts are. But it's not about getting monetary policy tighter. Disinflation, long in the tooth, I had been calling that for all the fourth quarter and late quarter 3 already last year, and in September CPI had bottomed, and not just core having trouble retreating further, but now the headline one has pronouncedly turned up, and more than a few product categories had been responsible for that move. It's been, what I would say, quite across the board, and that has broader implications for the second wave of inflation. That is, these clouds are shaping up on the horizon. So I'm looking for this move in yields to continue, even though we are going to see some kind of a retreat, and there is palpable fear, there had been palpable fear of what PPI is going to turn out today later on. This video is recorded, of course, more than 2 hours before the opening bell, so you will have an opportunity to review it before PPI is announced, provided that you have notifications on. So thanks again for liking this video and subscribing to the channel. I will be linking as well to extensive Saturday video where I had been featuring this rate cut chart for June. CME watch tool, roughly even prospects between doing nothing and cutting once. However, see how it had changed. Prospects for rate cuts are growing ever more distant, and this 1/3 odds of at least one cut is way overestimated, to say it politely. You remember me featuring on Twitter this heat map. It's approximately when prices in S&P 500 had recovered over 2/3 of the CPI decline, and you see that there are quite a few flies in the ointment when it comes to which names had been leading the ascent. Palantir, you know that I had been calling this stock bullishly ever since being requested to cover it in November, and it truly did beat, so we are having an upswing there continuing. Similar story to Meta, drawing higher. Yesterday it was as well Apple with its new product introduction that is very reasonably priced, that will allow it to compete more efficiently worldwide, not just in China, where it has to counter that 15% discount that is being offered to Chinese consumers opting for domestically produced smartphones. SMCI I had covered already this week before earnings, and I had been calling it to rise, and we got more proof. However, the sea of redness, especially in finance, had been pretty telling. That's why I had covered for clients already how I had perceived the closing price action to be, not just in tech, but as well in financials, which is the significantly red field, which had been disquieting for quite a few bulls. And I am a stock market bull when it comes to the year-end closing price, making it clear. But it's the path, and that's pretty much everything. So just a reminder of this SMCI bullish call, even following those earnings, which had not been received in a stellar way, but had been understandably bought, because the overall interpretation of the call is leaning bullish. This is how I had commented early Central European morning, which is 1 hour before London, so it's 8 o'clock GMT, 8:15 to be precise, as regards the key levels between low 6060s and 6115, where I had perceived already yesterday the 6090-ish area as the key area, as the key, more than a flipping bullish midpoint. And we had seen stocks rejected during the Asian session at this 6090 level precisely, and I had of course already interpret it for kinds what I make of the pre-market action right now. So the point of me showing you this is to weigh what are the macro drivers, how it's going to be affecting company earnings, and not bullishly, where yields are going, equity risk premium, not bullish influence on equities and multiples. However, compare that to the very fluid, fast-paced, and this is not just a matter of 100 days of the new admin. What is going to be happening on the international front, be it tariffs, be it the plan to roll over US debt into really long maturities, the Mar-a-Lago agreement. Let's see what is going to be happening on this front, which would be very significant development, and you have to connect the dots, what kind of role the tariffs are playing in this inducement of China and Europe to make a deal. The art of the deal, that's how is it called. This is the chart that I had been just covering in talking, the rejection at 6,090 and how I had been and what kind of a decision corresponds to this area, how odds are being shifted, because we had seen the midpoint of the CPI slide holding pre-market, and that's a sign not to ignore. Nasdaq as the outperforming index, as the leading index, had correspondingly held the run-up to CPI level, and that's not without consequences either, especially if you couple that with what the Russell 2000 is doing. I join page to help you select what's right for you based on what and how you trade. Ellen made quite some fine calls in the intraday channel, riding on the Trump peace move when this initiative regarding the Ukraine theater had been introduced. So you sure have not missed that on my Twitter feed either. You know my professional journey and what these infographics mean. Obligatory disclaimer, and let's talk soon.